Are you one of Warren Buffett's fans, eager to know his investment strategies during recession? Then make sure you watch this video till the end. Warren Buffett is the chairman and CEO of Berkshire Hathaway. It's always worthwhile to view Buffett's letter to the shareholders to get an idea of his portfolio. His advice is followed by investors around the globe, as he is one of the finest value investors of all time. In this video, we will discuss if he is buying or selling stocks during the 2020 recession. Before we move on, please click the like and subscribe button for more updates. Berkshire Hathaway released its 13F form on the 15th of May, which displayed the company's financial position as on 31st March 2020. Companies with over $100 million in assets under management are required to file the Form 13F with SEC in every 3 months. And as per the 13F form, Berkshire Hathaway sold 10 million shares of Goldman Sachs, accounting to 84% of its position in the stock. Buffett bailed out Goldman Sachs during the 2008 crisis by making an investment of $5 billion, which gave his company around $500 million as dividends every year. What's really surprising is that when the stock market hit the bottom in March, we all really had an opportunity to buy stocks at low prices than usual. But Warren Buffett didn't invest in any stocks. Rather, he sold shares in 21 stocks and bought only one stock during the first quarter of 2020. Not only bank stocks, but also airline stocks such as Delta Airlines, Southwest Airlines, United Airlines and American Airlines were among the sold stocks. The only stock bought by them was the large corporation of regional banking called PNC Financial Services. Berkshire Hathaway increased their share in PNC by 6%. In order to understand why Berkshire Hathaway was a net seller of stocks during the market crash, we will have a look at the cash position first. As of March 31st, they had more than $124 billion in cash, but this cash wasn't used for purchasing any stocks. The big question on everyone's mind is, why has Buffett sold so many stocks and purchased only one? Let's see the reasons behind this. Reason number 1. Warren Buffett doesn't want to rely on banks or investors during times of crisis. He wants his company to be strong in order to withstand any situation, and that's why he is maintaining huge amounts of cash in hand. The effects of lockdown of economies globally might come in the form of an extended recession, and in such events, Berkshire Hathaway will require cash to survive on the road. Holding cash is one of Buffett's strategies, which can also be seen from his 2019 letter to the shareholders, where he said the conglomerate has pledged to always hold $20 billion in cash to protect against external calamities. And also, any activities threatening this cash buffer will be avoided by them in the future. Reason number 2. Buffett said that he wants to deploy the cash, but he would rather wait and invest in something big. So it could be said that Berkshire Hathaway didn't find any good opportunities. But this doesn't mean there weren't any. The thing is, they didn't find any companies for investing as per their requirements. Also, in the shareholders meeting, Buffett talks about Fed being so quick this time in bailing out companies that required support, and probably this didn't provide Berkshire Hathaway with any opportunity. Buffett said there is no shortage of funds due to the actions taken by Federal Reserve, due to which he hasn't found any attractive deal yet. Let's have a look at the lessons we can learn from Warren Buffett. Well, Buffett profited from investing in companies whenever they were down during times of crisis. Yes, that means there are many stocks during this period of recession at the lowest, and this seems like a best opportunity. However, take a minute to consider Buffett's strategy before buying any stocks. One thing to bear in mind is to look at the underlying assets and the value of the company rather than the stock price. Therefore, reconsider your investment strategies, and maintain adequate cash in hand to deal with uncertain times.